If I would have to pick only one investment for the rest of time, my first reaction would be, oh no, I can only pick one. But then when I would let it sit for a moment, there was almost no doubt in my mind of which one it'll be. And in this video, I want to talk about what that investment is. And most importantly, why? Because there's so much noise in the investing world, right? Crypto, stocks, real estate, NFTs, and it can just be confusing. So if you're on your journey to building wealth and you're not really sure what to invest in, you can benefit not just from what investment I would pick, but also my approach to thinking about investments. So that by the end of the video, you can make like a list of arguments, pro and con, for the different investments that you were thinking about. If we haven't met, I'm Sophia. I've been learning about money and investing for more than a decade. And on this channel, we explore the strategies to build wealth without living frugal. Now, before we begin, one more note. When I was starting out with investing, I started out with little amounts, like 50 euros per month. And that did bring up the question, okay, what do I start with that actually makes sense in my situation? And one more thing, this is not investment advice. I'm not a financial advisor. And this is just a thought experiment. So not even I do, in reality, pick only one investment, okay? And now that being said, the investment that I would pick, and this is not even the oldest, by the way, but I'll get to that later. So the one investment I would pick are stocks. And in this video, I will not argue for one specific strategy when it comes to stocks or against. Okay, no, that's not true. I do argue against day trading, but first let me tell you why it's stocks as an asset class in general. And I would say there are mainly three reasons for me. Number one is that I can build equity. And the way I personally see stocks is that I buy equity in a company because that's what stocks are. Like, when you buy the stocks of a company, you own a very tiny piece of that company. And then the company uses that money to grow. And all the people working in that company, going to work every day, they are part of creating that growth. And what a company ultimately does is it provides value of some sort. So people buy the product or the services of those companies because they value it. And so basically that's the way I imagine it sometimes. You have people working for you every day on a very small scale, of course, but that would be one way to look at stocks. Now, obviously, it's more complex than that. So all sorts of factors play into whether a company grows, like economic factors, management factors, trends in society, also market trends. But nonetheless. And the second one is performance. So when we look historically, and here by historically, I mean the short history where we have actually the numbers to measure it. So when we look at, for example, the last about 100 years, then stocks have performed better than all or at least most other asset classes. And that one is important when we look at the long term. And that brings us back why I would argue against day trading is because stocks in the short term, so when we look at a period of less than 5 years, less than 10 years, they are very volatile, which means their price goes up and down all the time. So you will never hear me say, day trading, yeah, sure, try it out with your hard-earned money. Because the deal with stocks is that you gain when you stay invested over long periods of time. And that goes especially for us private investors, because there are some institutions that do have short-term gains in the stock market, and that is due to extremely thorough analysis, lots and lots of resources like money and people, and I would argue even an ounce of luck. But performance over many, many years, so 10 plus years, even 20 plus years, that requires way less luck. That's the performance I am talking about and that we want for our wealth, right? And reason number three is risk management with little money. And first, let me cover the risk management part. So when you look at all the businesses in the world, or even just in a specific country, then actually the vast majority of those businesses never gets to a revenue of 1 million per year. And not just that, but statistically, 80% of businesses fail within the first 5 years. But businesses or companies that are publicly traded, and that's what it means when we can buy their stock over a stock market, those have already proven themselves, if you will, proven themselves for at least a few years, and they usually make much, much more revenue than just 1 million a year. And I'm saying this because you can have equity in other companies as well. Maybe you have heard of venture capital or of private equity, and with those you also own a part of the businesses, but they are smaller companies and their growth potential is higher, but so is their rate of failure. And I would say that is relevant if we invest our hard-earned money. And not just that, it's actually not nearly as easy to invest into stocks as it is to invest into private equity or into venture capital. All right, and now let's continue with the small amounts of money. So I started out, like I said, with 50 euros per month, and I still was able to diversify over the whole world. Now, just in case you're not familiar with the term diversification, it's how many different stocks or also how many different asset classes you buy. So it's kind of like when you imagine a carrot soup that has only carrots in it, that's not diversified because there's only one kind of vegetable. But when you imagine a vegetable soup or minestrone, there's maybe already 8 different vegetables in it. So already more diversified. Does this make sense? And when I, for example, imagine that I would have wanted to invest into real estate when I started out with my 50 euros per month, I mean, that's almost impossible. Because first, I would have been able to only buy one property. So that's pretty much zero diversification. Do you know what I mean? Because it's only one. And second, I would have had to take on a loan, like a huge loan, and that's just another layer of risk. Now, that is not to say that you should not invest in real estate if you want to invest in real estate. It's just the thought process that I went through when I was starting out. But anyway, I think it's a huge, huge advantage that we can start with those little amounts of money, especially in the beginning, and still spread our risk over so many different companies and also so many different countries and regions. It's funny actually, because when we look into the history, then stocks are one of the youngest asset classes we have. The first ever stock dates back to 1288. And another year that is mentioned in that context is 1600. And all the other asset classes or types of investments like lending, real estate, commodities, and precious metals like gold, they go way back up to 9,000 years before Christ. Isn't that crazy? And that is why it was so important for me to tell you that it's just a thought experiment and it's still the majority of my whole portfolio. But it's also a certain stage at building wealth that I'm at and that I made this decision for myself. And just because I started there, and maybe you start there as well, doesn't mean we stop there. Because now that I'm thinking about this, these other asset classes have proven themselves for over 10,000 years. So you're definitely not doing anything wrong with those as well. Does this make any sense? I think what matters most in the end is that you think about what you want to invest in, you really dive a little deep into the pros and cons, and then you make your decision and you stick with that one, and then later you can still, check out the other ones. Because I would also argue the higher your net worth, the more it makes sense for you to diversify. All right, if you're still here, thank you for watching. I hope you got some value out of this. Subscribe if you aren't already, and I'll see you in the next video. Bye-bye.